Hello, everybody. Hopefully, everyone has found their way with their links, personal links to this Zoom seminar, so that we are ready to start. Welcome to this somewhat unconventional format for a release event of our study. We are having a virtual coffee break, as you probably saw in the invitation. So hopefully, everybody now has their coffee cups and tea mugs available and has settled comfortably in your own homes or offices or wherever you are spending today. We are discussing today the study called The Net Impact of Nordic Investing and Business in 2020, which we are happy to announce that we have now put together and also baked into a report. You have all gotten the link to the report in your emails earlier today. And in case you missed it, don't worry, we will soon also share the link with you again. So what is this all about? It's about celebrating one milestone in our Nordic research consortium called Net Positive Nordics. This research consortium, consisting now of already more than 50 organizations, both investors and companies in the Nordic region, was put together earlier this year with the ambition to bring together Nordic companies and Nordic investors to jointly raise the discussion about impact of business to the next level, to bring more rigor and comparability, and maybe also a little bit of common sense thinking to the whole discussion of how companies actually impact the world around us. Today is about, and the purpose of this session, we now have a tight schedule of 1 hour together. We are not going to go through all of the findings of the study. That's what the report is for, and I encourage all of you to have a look at it, but rather highlight a couple of themes arising from the study and from our discussions with our participants along the spring season, and of course of the analysis work and the modeling work itself, and discuss them together with some of our friends. Which actually brings me to introducing the setup of today. As you can see, I'm not here alone, but rather accompanied by 4 great gentlemen. And I might actually start the introductions by introducing a person who's joining us today and who's been actually mentoring, advising the Upright project from the very beginning, already since 3 years ago when we initially put together the company. So may I introduce to you Risto Siilasmaa, who is the chairman of Nokia and also the founder of F-Secure. So welcome, Risto.
Thank you. Hello, everyone.
So Risto, you actually already had a chance to have a teeny tiny sneak peek to the report on Sunday. So what are your expectations for this 1 hour discussion today?
Well, I really like the approach you took with the report. There's lots of data in it. I'm an engineer, both by education as well as sort of, that's how my mind has been built. So I really like the amount of data and the different perspectives it gave. It raises a lot of questions, which is good, because that paves the way forward as well.
Yeah, looking forward to those questions as well. Another guest friend that we have today is a man who has looked at the financial sector for quite some time from different perspectives, and it's also then that's one of the reasons why we've invited him today. So this man is the chairman of not just 1 or 2 or 3, but actually 4 Nordic stock exchanges. So the chairman of Nasdaq, the Finnish and the Danish and the Norwegian and the Icelandic Nasdaq stock exchanges. So welcome, Lauri Rosendahl.
Thank you very much. Happy to be here.
So Lauri, what are your expectations for the discussion, also having had a tiny sneak peek?
Yeah, I think that your approach is so different, so refreshing, and it's kind of totally compared to the kind of mainstream of where public companies are with their sustainability work and ESG reporting and all these kind of things. I think you bring a completely different aspect to it, and it's like a leapfrog into the future, I think. And therefore it's really, really enjoyable to read something that's kind of totally different from the mainstream, and it creates a lot of thoughts in my head, it starts to spin around. So I will really need to dig into the data and understand it and your methodology as well. So I still have some learning to do, but I think it's really refreshing to see this kind of an approach. So congrats already at this point.
Thanks. And the congrats go to the whole Upright team doing a lot of work, and not just us here, but also our whole team behind it. I can recognize that spinning in my head feeling oftentimes when looking at the data and looking at all the aspects of our model. That is a familiar feeling to us as well. I also have here right beside me a handsome gentleman called Juho Ojala, who is the CTO of Upright and also my co-founder. So welcome, Juho, also to the discussion.
Thank you. It's great to be here.
And then last but not least, we also have the one and only Toni Laitila from the Upright team, who is also acting today as sort of channeling your messages to us from the audience. So Toni, would you like to say a few words also how the audience can participate in today's discussion?
Yes, sure. Thank you, Annu. Good to be here with you all today. So yes, as Annu said, you have a chance to ask questions, and that's encouraged. So in this Zoom app, you have this Q&A functionality available. So just please feel free and ask your questions there. They will be visible to Upright or all the panelists. So we will pick them up and try to answer them during the session. And secondly, as Annu already mentioned, we sent the report to you just an hour ago, but in case you missed it, we'll add link to the Zoom chat so you can download the report from there. And lastly, please take the discussion to social media and Twitter or wherever. That's encouraged again. Just use hashtag #NetImpact and tag Upright Project along so we can follow the discussion too. So great to be here. Good to see so many of you here, and I'll give it back to Annu now.
Thanks, Toni. And maybe you can also put the hashtags in the chat so that people can find the right handles and hashtag if they want to share questions or views on social media as well. And actually, now that Toni talked about the report and the publication, we are not coming out today with just one report, because why do just one if you can do two? Juho, would you like to shed some light to the other publication that we are publishing today?
Sure. So today, in addition to the Positive Nordics report, we are also publishing today a white paper on the Upright Net Impact model. So it's a little bit more technical introduction into how the model actually works, and also describing how the data that the model produces is different from other measures that somehow relate to the value creation of companies. I think Toni will add you a link to the white paper as well to the chat, so you can find it there. Also in the report, you will be able to find a link to the white paper.
Cool. So if you are all now sort of safely and comfortably in your coffee break lounge chairs, I suggest that we dive into the contents. So as said, we will highlight today a couple of themes from the report in our discussion. And while we do that, we are sharing a couple of graphs on the screen. And don't be confused by this sort of shuffling back and forth between some graphs and then again our beautiful faces. That's something that we just do here on the background as we go along and as we discuss. But should we actually jump to the first theme and get started?
Sure.
So while Juho is setting up our screen share, the first theme that we would like to touch upon today with you is something that was quite clear from the study and through our discussions during the spring with all the participating organizations, which is that how we're used to perceiving companies and how we see their sustainability brand or image is not necessarily at all the same thing as the net impact and the net value creation of companies. What we're interested in when we are measuring net impact and net value creation, whether it's from the perspective of an investor investing their money or a company running and growing their business and developing their strategy, is to really look at the resource allocation that happens to the company. So what kind of resources does the company use and what does it get done with those resources? What are the values that it creates? And we realized during the study that necessarily these two things, the kind of like emission sustainability and how strong a net impact sort of profile is, don't go hand in hand. This was seen in for some companies that are often being applauded for some of their sort of more compliance features when it comes to sustainability, doing something sort of rigorously and well, but at the same time using resources in a way that was not necessarily performing very strongly or not actually contributing to some of the essential components of our modern societies so much. But this also went the other way around. So there were a lot of companies that were not at all seen as so-called impact investment companies or green companies, but were actually very strong in how they use their resources and actually creating very relevant, essential things for our societies with efficient, good, common sense resource use. Just as one highlight of this, or actually two little highlights from the report. You can find a lot more examples in the actual report, but for this discussion, we raised two examples. So one of them is an electricity transmission grid operator here in Finland called Fingrid. And one of their products, which is basically maintaining and renovating the power lines that they have built all across Finland, the main power lines that we all need to run our electricity system. We're used to looking at players like electricity transmission grid operators mainly through their negative impacts, whether it's through the emissions or looking at what happens when we have to cut down forests in order to make space for the physical power lines in the forests. However, when looking at their net value creation and looking at the positive side, so what kind of value does it create that we have these power lines and we have this system that is being renovated and maintained to run our hospitals and schools and all of the things that we need in our modern societies to survive. We saw that actually the net sum of the costs and gains was quite positive, for example, for this product. Another example just highlighted here on this page then was from the industry transport, which is typically mainly discussed through the negative side again, the emissions that it causes and so on. But we sometimes fail to look at the upside of being able, for a person to being able to move from point A to point B. And for products that are doing this in an efficient, smart way, for example, through electric trains in urban transport. This is an example from Finnish rail transport provider VR. It actually plays out in a pretty common sense, strong way in terms of net value creation. This was not just visible when analyzing companies, but also when analyzing funds for investors. And one of the maybe, I don't know if this is almost a bit controversial or not, but one of the main findings that we had from this part of the study was that funds that are marketed with ESG or that are marketed as sustainable funds or somehow with the themes having to do with impact were quite often, not always, but surprisingly often outperformed by funds that were just so-called normal funds, so not having anything to do with impact or ESG branding. I'm giving you one example on this page. This is actually from outside the Nordics, because obviously for the analysis we analyzed both inside and outside the Nordics to get a comparison group and to understand where the Nordics stand today. We have an example fund, an ESG ETF by UBS, that is being built with an algorithm that basically it rules out the bottom 10% of companies that have gotten the bottom 10% rating from a traditional ESG data provider, and it replaces those investments with ones that have been performing better within the same industry in the ESG traditional ESG rating scores. While these companies inside it probably do feel the criteria having to do with what the ESG is measuring, for example, with compliance and how much resources is being put into them, still when looking at the net value creation of the companies in it and what investors are investing in when they invest in this fund, is, for example, quite strong in some alcoholic beverages companies whose scientifically proven impact profiles are not that, or impacts that they cause are not that strong. We are now comparing it on this page to one so-called normal fund, so Fidelity Contra Fund, one of the largest active managed funds in the world, and a fund that is especially known for its pretty strong, outstanding, actually, sort of financial results. And this fund actually investing, when we look at it in more detail and look at the net value creation profile, is actually a pretty strong one, with significant benefits in health and society, but also in knowledge, especially in knowledge infrastructure. So with this little introduction, I would like to turn the discussion to our guests, Risto and Lauri. So you have both sort of been looking at the global business world and the financial sector for quite some time, even though you look so young, but still you have seen a lot of things that maybe not all of us in the upright team have seen in the global business and financial world. So where would you say we stand today in terms of this kind of contradiction of understanding how companies are doing what they are doing versus what they are actually doing and what their core business is? Risto, would you like to start by giving your comments?
Yeah, I think we have traditionally pretty much paid lip service to the actual idea of what kind of an impact each company has on the world around it, largely because it has been technically so difficult to measure. And therefore we have focused on perhaps second level or less important strides forward in reducing our negative impact on the world by focusing on how much less electricity we use every year, or things like that, where we can celebrate minuscule improvements on things that actually don't really impact our net footprint in the world around us. But if I may take this opportunity to just think a little bit out loud about what's happening right now, because I think we have all faced a fairly brutal awakening through the COVID-19. In many ways, we have seen how fragile the world is around us, and how fragile human life is in the face of the black swans that may arise. And I think that can be a force for good. If we now stop to think about what we actually should be more focused on, what is truly important in the end. We have also seen how our waters have cleared, how the air has cleared, how the Indians see the Himalayas for the first time in a long time, and how Beijing looks completely different. And even in Finland, we can see Tallinn, the capital of Estonia, which usually we don't because of the cruise ships that go across the Finnish Gulf all the time. And hopefully even those images will remain with us after this crisis is over. And we also have seen how inequalities everywhere. Even in a crisis like COVID-19, people are not equal. Even in the developed world, we have seen how lower paid workers have more challenges working remotely because they typically work in jobs that require a physical presence. We have seen how in the developing world, let's say India, where there are severe challenges with the population and social distancing. And definitely if we think about places such as the refugee camps in Syria and the neighboring countries to Syria, where it can be that 40,000 people live in a camp designed for 4,000 people, and the Western aid agencies have left the camps, or to a large extent have left the camps because of COVID-19. And there's no sanitation, there's no running water. How can they survive if an infection starts spreading? So a fairly brutal awakening in multiple dimensions. And hopefully something good will come out of this. and we'll be more focused on the real net impact we can have and we should have.
Yeah, really, really hoping that as well. What about you, Lauri? What kind of thoughts did you have?
Great question, Annu. I think it's kind of the question, and I'm totally aligned with Risto. And I see this as kind of an evolution that COVID-19 is likely to accelerate. So I think that if we start with the bigger picture, we are all recognizing that we have a global issue when it comes to sustainability and what we do with and on this planet, right? We all know that, or most of us know. Most of us admit it as well. And as we contemplate on what we should do differently, we need data, we need information. And I think that, being responsible for running exchanges, I think that public markets are great with the transparency and requirement for different kind of reporting, and ESG data is kind of one of those things that are evolving. And from them, companies also commitments to improve, like Risto said, on kind of sometimes simplified parameters, but it's still something. But I think it's, especially when it comes to CO2 emissions and fossil fuels and so forth, but I think it's evolution and it's step by step. And it's only the beginning. It still is, I think, when it comes to sustainability and company activity. We are still far away from generally actually measuring what you would define as sustainable company net value creation. I don't think many companies actually understand even the terminology, and you are part of actually making that terminology understood to people. So we have started, I would say, a discussion around that now, when companies kind of have a purpose of maximizing profits, given some parameters in terms of how you should behave, how you should handle your business in a proper way, governance measures and so forth, and be transparent about what you do and how you do it. But what the impact is, I think we are at the point of discussion, and that's the measurement that I think that you bring a kind of a fresh approach, and this is something that we need to really start digging into. And exactly as Risto said, there are values in society that COVID-19 will definitely raise to the discussion tables, be they political or on a company level, board levels. And I think that there will be positive implications out of this. And I think this will only accelerate the discussion on real net value creation that companies are doing.
As so often happens, this is a crisis too big to waste. So let's use it to have a positive impact. And one aspect of that is what I believe many companies will be doing is rethinking or refining their purpose in light of what we have learned and experienced.
Yeah. In many ways, I would say that as humanity, we can't afford to not learn from this crisis, and there are many reasons why we should do our everything to really learn what this crisis is trying to teach us. Which actually brings us pretty nicely and smoothly to our second theme, which is kind of like understanding the net value creation a bit more holistically than we're used to. So the second theme that we'd like to raise in the discussion has to do with the fact that we are used to really looking at, when we look at a company, we're used to looking at the internal impacts that the company has on the surrounding world. These are typically the things that companies themselves can and should and are reporting on and measuring. Let's say that how much water did facility A use, or how much greenhouse gas emissions are coming out of facility B, and so on. However, when looking at the net value creation, especially in this the global markets and this extremely interconnected world that we're looking at, I guess this is a point that COVID-19 has also been really, really pushing into our faces if we weren't aware of it before, is that we need to be understanding the value chains end to end to really understand what we are investing in when we're investing in company X, and as managers and owners and entrepreneurs, what we are really endorsing through our business. It's not necessarily just what happens inside our own houses or our own facilities inside our own company, but rather something much more broader. And we need to understand there not just the upstream part that we have gradually started to pay more and more attention to in the global impact thing, which is a great thing, understanding especially the second and first and second and third tier of suppliers, but also understanding downstream. So what happens, what does the product actually do when it's being used by the next step in the value chain, whether it's a company in B2B business models or an end user in B2C. And one of the areas where this was especially sort of visible in the Net Positive Nordics study was professional services. And this is something where actually from the very beginning of starting Upright, we have been getting some contacts from for example, consulting agencies or law firms who approach us and say, hey, what kind of advice do you have for us? How should we be looking at our impact? So we've already gotten our Green Office certificate done, and we have changed our plastic cups in our offices to paper ones and so on. We kind of feel this is not really yet the whole thing. And how we approach impact for professional services companies when measuring net value creation by companies is by looking at who their clients are and what the clients are doing and what the professional services company is helping the client to do. We see that in an example where, let's do a very sort of rough, naive example that an IT consulting company is helping a net positive company to do something good. According to this sort of methodology, this approach that we are endorsing, the IT consulting company should inherit some of that positive impact, and also the other way around, of course. When actually analyzing, and there were also a lot of professional services companies taking part in the Net Positive Nordics Research Consortium, we look at the real clients, so the companies themselves in a lot more sort of granular format, but because that's typically confidential data of who the clients actually are, on this slide we are just highlighting a sort of more sanitized example of, for example, a software development consulting company, how 3 of their clients, one coming from the fast food industry, one from the health and well-being industry, one maybe from the energy industry, what kind of different profiles might they have. Of course, as said, you need to look not just the energy industry as a whole, but of course in more detail what the company does. But this gives you an overall idea of the differences that might arise and how that then impacts the net value creation of the professional services company itself. And this opens, of course, a bit of a new sort of level and sphere of responsibility for companies. And we understand very well, and we've been discussing it internally at Upright a lot, how this discussion should be framed, because we understand that a lot of people also feel that this means that we are supposed to be actually choosing our clients based on this. And the short answer in net value creation is, I don't know, but it does impact on what the impact of your work really is. So my first question would be to actually Lauri, you, looking at from the perspective of stock exchanges. So for example, looking at Nasdaq, in our methodology, the net impact of Nasdaq depends on not just how well you do and how well you provide the marketplace, but really like, what are the companies that are listed on the stock exchanges? So what kind of business models and value chains globally are you sort of endorsing and enabling and making more efficient? So what is your take on that?
Well, I think that is one of the good questions actually, and I agree on the approach, because I mean, typically when it comes to sustainability, I mean, the efforts that we have done is like looking at our data centers where we run our computer parks and looking at how can we kind of cut back on electricity consumption and how we, for instance, can take in rainwater and use that as a coolant instead of using kind of fresh water and stuff like that. But the bigger picture question, of course, is that if our purpose and mission as an exchange operator is to help companies raise capital so that they can invest, they can grow, they can create jobs. That's the positive impact when we help them when they come to a public market and they raise capital, they can grow. And on the other hand, then offer investors a fair and orderly market with good rules and great investment opportunities, of course. So the more the merrier, of course, the more companies we bring to the market, the more investors can choose between where they want to invest. But then the question comes that from an ethical, moral, and sustainability point of view, should we help all companies go public. And so far, we've done that. That's the kind of 100 years plus history of exchanges that we do not kind of, we don't pick and choose. We set the rules and companies can come to the public market and investors take the decision if they invest. And we do have a lot of investors that are very picky these days when it comes to sustainability issues, like do they invest in, say, cannabis production or casinos, or all these kind of things that you can wonder if that's the right thing to do. And of course, looking at the Nordic countries, there is an exchange in Norway that has a lot of fossil fuels. It's not part of Nasdaq, but still it's kind of an issue that, how is that going to evolve over the years to come? And I think that this is part of an evolution again. And we have rules on transparency, on reporting, on governance, how you need to conduct your business. We have recommendations on sustainability reporting. So we definitely recommend companies that be as transparent as you can, so that investors can make their judgment if they want to be or invest and provide capital to the company or not. So far, it has not been for the exchange to be, from that perspective, a gatekeeper. But what we do is that we require and promote the transparency. And I think that, again, being able to measure both net impact, value creation, and then also when it comes to transition, for instance, measure transition from where companies are today and where they are heading when it comes to sustainability and net impact is a kind of a step-by-step model. And of course, as an exchange operator, we are definitely there to support that kind of a change.
Yeah, and these are not easy questions. I mean, that's something we battle also internally in the Upright team every day to think, is it really like what kind of sort of broadening of the sphere of responsibility can be expected? But however, from the measuring point of view, we are sort of stubborn nerds in terms of saying that it does impact the net value creation. What about Risto? You're looking at this picture from, of course, multiple companies, but maybe one example that probably everyone in this meeting today knows is Nokia, a company that you also happen to know quite well. So, for example, for Nokia, how our methodology works is that according to this sort of end-to-end value chain modeling, the fundamental end uses of Nokia's connectivity solutions impact Nokia's net value creation, because they are essentially what is being enabled in good and bad, and not taking any sort of, it can be in anything basically that is being then done with the end users. But and we kind of say that it impacts Nokia's net value creation regardless of how little or how much Nokia can today control or influence these end users. So what would be your reaction to this, and do you think we are going too far?
I think for all companies and all businesses, they need to think about, when do I turn down business? And it's one of the hardest things to do, especially if, of course, it's nothing illegal, but it's just a business opportunity where you ask yourself, am I making the world a better place if I take this opportunity or not? And then do I turn down the business opportunity because of that? It's a really tough call. And of course, for the companies that I'm involved in, I'm really lucky in the sense that we typically do services that are sort of inherently positive. So like telecommunication services, even in countries that have a system that we don't perhaps fully appreciate, one can claim that efficient communication networks and communication mechanisms are a force for a more democratic society. And of course, you can then build systems on top of these networks that mitigate that or remove that positive effect. And it is a difficult thing. For cybersecurity, we have, and we're not alone, the industry, most of the players have turned down profitable business opportunities for as long as the industry has existed. When, let's say, someone asks us to build a backdoor or help them, crack encryption systems for purposes that are not completely clear. And there, the customs are built into the DNAs of the companies so deeply that it's not even a top management decision to turn down certain business opportunities. The salespeople will do that automatically. But it's hard.
Yeah, very true. But maybe something to keep in mind is that it's the point about turning down business is definitely true and a tough one. But also looking at the net value creation of your company might bring you not just turning down business, but discovering completely new ways of conducting your business when you take it into account. One of my favorite examples was actually from last week. We had a sort of workshop of the study consortium results with the executive team of one large Nordic transport industry company, and one of the examples when discussing exactly this, that what they actually carry when they are doing their cargo part of their business and how that impacts their net value creation. There was actually a very interesting thing that one of the executive team members mentioned, that they had actually been asked by one of their suppliers, which is a large player with a lot of sort of influence in this scene, that was asking that, hey, is our equipment used to carry coal? Because we don't approve of that. And that was really, even though that was just one anecdote, not taking into account, like not commenting on whether that's the right way to go or not, but I'm really like, it's interesting to see that these kinds of things are becoming a reality. They're basically saying, we're not selling this to you if you are carrying X, or if you are doing then these and these things in the value chains. So I think the world really is changing in this respect, and this kind of transparency and the kind of like also broadening the sphere of influence for companies, and this kind of not in my backyard type of thinking no longer flies when you are explaining.
I think that's a great example of something that is a really tough nut to crack.
Yeah.
Because let's imagine that this rail transport company would refuse the business from a coal mining company.
Yeah.
And then that coal mining company would be forced to use trucks
Mm-hmm.
to transport that coal. What's the net impact of the rail transport company's decision? It's a negative impact.
Mm.
But it would not be visible in their net impact score.
Yeah, exactly. This is one of the things where then, of course, we would say that what is the sort of contrafactual that this needs to be compared to in order for this choice to be fair for the other players as well. Of course, still we are kind of like contradicting the common saying that somebody's saying, hey, if we didn't make sugar sweetened beverages for kids, somebody else would be making them. That didn't fly for me when I was 5 years old and in kindergarten. My mom wouldn't let me say that if I wouldn't bully that boy, then someone else would bully them because he looks stupid. But rather like this is something we don't let our kids do. So in that sense, we are also kind of like sort of encouraging the kind of behavior where you would take those high standards and communicate them open enough, and then that would be one of the mechanisms in which it also translates itself into real business incentives. But you are right, those questions are tough, and that's why we are also raising them.
Yeah, one point I would like to add to that is that even you're right, we shouldn't be naive and think that if one rail transport company stops carrying coal, that coal will not be carried at all. Of course, that's not going to happen. It's going to probably, as Risto said, going to be carried with trucks, but it might be not the same amount, because of course it increases the costs of coal. And standard economic theory even says that that will affect the supply curves and ultimately decrease the quantity of coal that is being carried. But yeah, certainly there are these kind of dynamics.
But this aspect is actually one of the ones that I'm most excited about regarding businesses. Mm. If a business can get a detailed breakdown of their net impact, broken into the 4 dimensions and the 17 or 18, how many were there?
18 impacts.
The different impacts. And if you can then dig down into those And you can always ask yourself, what can I do to improve this particular bar? And actually most of them have a negative, the cost side, as well as the positive outcome side. So you actually have twice that, or in most cases, almost twice that number of areas to dig into. Can I improve this or increase this? Can I decrease this? And that starts a new discussion in many companies.
Exactly.
And I think it's actually part of the, I would just in the bigger picture, it's kind of an evolutionary path that we are on. And now the parameters are very much related to sustainability. But I mean, like corporate social responsibility started like 250 years ago when there was a discussion in the US where some corporates took the decision that they would not be supporting the use of slave workforce in their sub-supplier chains, or whatever they were called back then, I don't know, but that was practically that some institutions took the decision that anything produced by using slaves is not okay. And it's kind of, you kind of feel today that it's like ridiculous, or of course we had to get away from that. But I think that what we do today might seem ridiculous from a parameter point of view or valuation point of view 10 years, even only 10 years from now. And this is the evolution that I was referring earlier, that things change, we need to evolve, and we have a planet to take care of, and the net impact is really, really important so that we get this right. And it's not only climate change, it's not just kind of that aspect, but I think it has many elements of social and governance as well that evolves over time. And we need to evolve with it. And I'm really happy that the Nordic countries, when it comes to transparency and sustainability reporting and so forth, are definitely in the forefront of everything globally. And because I think that this is where you can actually create value as a company, that if you do the right things in the right way, you will definitely get the support of your customers, the right customers that are prepared to pay for your services when you do it in the right way. Yeah,
exactly. I can see that time flies in our intensive little session. So I would actually like to ask Toni, do we have any tough questions from the audience before we dive into the rest of the themes?
Yeah, well, thank you, Annu, and thank you for the good discussion. Plenty of questions, all different types of questions. One interesting one was that I'd like to ask was that regarding this COVID situation now, there was a question that how do you imagine, I think this goes to both the Upright team, but also Risto and Lauri, how do you imagine the COVID-19 crisis may shape global supply chains of corporations going forward? What does this mean in terms of net impact? So please, do you have any reflections on that?
Well, I can start by just saying this is obviously something that we've been discussing quite intensively in the past weeks. We've been getting actually quite a lot of context also from investors looking at this with the perspective of how they can be more resilient to not just global pandemics becoming the norm, but a magnitude of other crises as well. I think one of the interesting things that we've been looking at, and we've done some initial analysis on it, is looking at what are the industries and the companies taking the biggest hit right now, and how that relates to net impact and the net value creation. And we can see quite a lot of interesting features there, because like in the end of the day, what we are measuring with the Upright model is kind of like, what are the essential values created by company X and how they relate to the costs that it's creating, or the resources that it's using. And we can already see a lot of differences in how global value chains and global basically just also industries are coping with this situation, and how hard they're being hit in terms of what is their role in running the essential things that we need to survive, like food and water and shelter and basic things that we have defined in the modern societies. I don't know if Risto or Lauri would like to make some estimates of how all of this will unfold net impact wise for different value chains.
Well, for supply chains, I think even already before COVID-19, the geopolitics were heading in a direction where the interconnectedness of the world was on the decrease. And we can debate whether that will have a negative or a positive net impact. But definitely from the point of view of global peace, one could argue that the more interconnected we are, the less likely a war is. And that might be a negative direction to head into. Now with COVID-19, where supply chains have broken down to some part, to some extent, and let's say for PPEs, some countries have even confiscated shipments going to a third country. And many countries are considering local production for goods that they have for a long time used to import from elsewhere. And many companies are also facing the same challenges. As, for example, you have a number of factories, and in some countries, people are prevented from working in those factories because of the COVID-19 situation. And then you need to have factories in countries that are hit less hard, where you can keep factories open. So you take a different perspective to that question. Centralization is not nearly as good in this situation than it is from a purely efficiency point of view.
Yeah, not much to add there. I would say definitely diversification of sourcing is going to happen on both on the public sector side and definitely on the company side, I think, because companies need to build their resilience in a new situation. And it's kind of interesting that everyone says that WHO and all kind of public sector organizations have definitely had plans for how to handle a pandemic and even a global one. But then when it really hits us and the stress test starts, we all know that there's been a lot of problems and challenges, but we live and learn and improve. But I think that on the company level, especially diversification of sourcing is definitely going to be high on the agenda, I think, to build better resilience, to get back to normal production, normal service provision after these kind of events.
And it may even be that insourcing will increase, sort of verticalization rather than horizontalization.
Yeah, definitely. Cool. I would suggest that we would actually now do theme number 3 as just a sort of 30-second little notion from our point, if you can just set it up, and then move to theme number 4 and then allow for a couple of more questions, time allowing. So theme number 3 as just as a sort of a little, also sharing the screen here from our side, as just as a sort of a little reminder, because I know many of you who are now reading the report from Nordic through Nordic lenses might also be interested in the differences between the countries. And maybe there, just to use that data as an example, it's very important to keep in mind that the kind of old notion of just looking at sustainability or impact as a one dimension where you can be good or bad, are you a sustainable company or not a sustainable company, is kind of outdated thinking. And we need to, as adults, start to understand these different kinds of lenses through which we look at a company. Whether it be in the eyes of a global pandemic, how essential they are, whether it be from fighting climate change, from creating jobs, all of these questions are obviously very crucial to us all today. And maybe just as a short little demonstration to show, for example, how the Nordic battle, so to say, changes if we concretely apply different kinds of sets of values to it. So here, for example, I don't know if many of you already looked at the report, but we can see. Let me see if I actually have to change it a little bit to see the thing like this. For example, looking at the top 50 companies in each of the Nordic countries, this was a little bit awkward for us because Finland came out as the least negative in this case. But of course, the relevant question is to ask, what are we trying to achieve with our, whether it's through our investments or whatever it is that we are using our powers for. So for example, here they are in the base case, they are just being each one of them is being weighed with the same set of values, but maybe, for example, the health issues now discussing the COVID-19 crisis might be something that also investors want to put more emphasis in. If we were to stress test these so-called portfolios against this, the situation would actually change quite a bit. So in this case, Denmark would take the lead together with Sweden, due to their both sort of heavy presence of a lot of pharmaceutical solutions in both the top 50 companies in both Denmark and Sweden. Another perspective that you might want to take in these times of crisis would be to say, okay, you might want to estimate how your stakeholders who think that this is now the time to really concentrate on the essentials, on getting the economies back up and running. For example, taxes and jobs is what we need to be looking at. How are the companies contributing to our taxes and so on, and in that way keeping our public sectors running, and how are they creating jobs? And if we then highlight through this optimization criteria, we get a completely different picture with actually Denmark, again, like in the health one as well, taking the lead, which is interesting when I had a look at this, where it actually comes from. It comes from both the taxes and the job side. From the taxes side, especially Carlsberg is contributing to a lot because of their high alcohol taxes. And then from the job side, ISS is actually a pretty in terms of its services sector jobs that it is providing, creating quite a bit of input there. But let's go back to and actually directly to theme number 4, so that we have time to cover it as well. If you go here. So as the final theme today, in our final minutes, we would like to highlight a topic that actually Lauri already brought in very shortly in one of your comments, which was a theme that arose that now that we did in Net Positive Nordics, we did kind of like a snapshot for companies and funds. We looked at where do you stand right now, just in one point of time. And then, of course, traditionally, we are used to looking at impact in terms of kind of like this backward-looking data of saying like what kind of things have happened before. This is simply no longer enough, because no investor invests in companies because of what they are today, let alone what they've done in the past, but rather of what they believe these companies will be creating in the future. Which is why, as part of this project already during the spring, we've been doing kinds of heavy sort of back-end coding to make sure we also understand the dimension of time, and that we allow companies to share their future targets also in the Upright database and in the Upright platform. And what this really allows is for investors to understand. They can then give different kinds of sort of confidence levels to the company's ability to reach these targets. It could be that we are 100% sure that, or that we give a confidence that 100% of these targets will be realized. Maybe it's something else, and really understand how, as a consequence, how your portfolio's impacts will unfold. Of course, this is only one lens, which is what the company itself plans to do and then plans to execute also. The other thing that is changing all the time, as we realized in the whole COVID discussion, is then what is happening in the world around us. And this has actually led us to inspire. There's been a lot of questions from you guys and the participants that is there going to be a phase 2, and what's going to happen next? What are we going to be looking at as the next step? We are proud to introduce the next phase of Net Positive Nordics. We're going to give more details to everybody interested later, but just as a brief mention now on future scenarios with net impact, where we basically look at both different kinds of global scenarios, whether it's global pandemics becoming the norm, climate change regulation becoming significantly stricter, and the climate change realities hitting us in different ways than they are today, and all of these different kinds of global scenarios. And then the other of course, sort of factor that we need to take into account is what are your companies or your investment strategies, different kinds of future paths. What do you plan to do, and what kind of different future changes of doubling business X, or maybe taking down business Y, and so on. What kind of impacts that would have on your overall net impact. Maybe one example, just as a sort of thought provoker, would be that it is almost unlikely in many of the global scenarios that the economic cost for example, greenhouse gas emissions would be exactly the same in 5 years or 10 years that it is today. And this also changes, not just from the perspective of how to save the world, but also how to understand the risks and opportunities for your business and for your investing in terms of where you are actually present. So this would be my sort of also as a sort of question to Risto and Lauri to comment on in the final minutes, looking at the sort of new level of also transparency required from companies in terms of setting their impact targets. There's a lot of things to be taken into account when moving from this world where we mainly say that we can make statements like, we plan to be a green company or we build a green future. That may not be enough anymore if we want to actually see what it means for your core business and what kind of changes are contained there. So maybe just some comments from Risto and Lauri. What does it take for companies to be ready for this kind of a change and this kind of new level of transparency in impact target sharing?
Lauri, do you want to start?
Sure, I can do that. I would actually look at it from two aspects, because you brought in the investment aspect as well. But if we start on a company level, I think that, you know, sustainability, climate change, like TCFD reporting, scope 3, has already brought kind of new dimensions to what companies need to think about in terms of scenarios for the future with the changing world around us. And I think that this will only accelerate due to COVID-19. And I also think that companies really need to start to think about how do they position themselves, say 3 years, 5 years, 10 years down the road. And they need to be very clear in communicating that to the investor base as well, because investors will be looking at these scenarios on their side, evaluating where do they want to have exposure, where do they want to avoid it, and who are the kind of industry winners in different industries in terms of both kind of positioning themselves in the right way for best business, but also from a sustainability point of view and kind of for the longer term. So there will be a lot of repositioning, and I think that every company needs to kind of think through that. On the investor side, I would add the fact that the asset management industry, including mutual funds, including, you know, everyone who supports both professional investors and more kind of retail investors, this challenge that we are in terms of sustainability in the bigger picture, the industry really needs to evolve and really innovate and do their R&D to serve their client needs when it comes to sustainability for the longer term. It's a very complex world with different kind of scenarios, and as an asset manager and providing different kind of investment services, you really need to differentiate and make up your mind kind of and understand investor preferences here and now and the needs that they have, and they will change over time and evolve, and whatever, you know, a professional investor wants in terms of exposure to the equity markets, for instance, today might be very different 5 years from now, when we kind of learn of how the world around us is changing and how the companies in different kind of investment strategies are repositioning themselves. And I'm really happy that this change is happening, and COVID-19 is I think only going to accelerate that change and bring focus both for the asset management industry to provide investors with the right kind of services, and also to companies that, you know, what kind of business are we in, what kind of impact does it have, and is this the right thing to do as kind of a business mix 5 years from now? And if it's not, what are we going to do? How do we transition ourselves into something that's better in terms of creating value both for shareholders, but also from a bigger picture to all stakeholders in wherever the company is operating?
Exactly. I can see that we've basically used all our time we have with the audience, but Risto, any final words for the perspective of the future?
Well, I'll just add to what Lauri already said. I agree with what he said, but I think one of the exciting opportunities with the upright technologies as a simulation tool. Mm. If companies, industries, even governments could use the technology that you are building, not necessarily fully today, but what could be there in the future, to simulate different scenarios and what the impact of those scenarios might be. That's, I think, a huge opportunity.
We think so too, and that is part of the big picture we have in mind. And if you want to take the first steps of looking through these little mini simulations of looking at different global scenarios and also your growth scenarios, you can already pre-register for the second phase by just dropping us a line at this email or any other contact channel for that matter. I think we have used all the time, so thank you so much to our great discussion partners, Risto and Lauri, and thank you to the whole audience. We will be also going through many of your questions and answering them also on social media, so that we can address all the questions that we couldn't address right now. And hope all of you are encouraged to take this discussion further by sharing the report or the white paper and coming on board to the next phase of the Net Positive Nordic adventure. Thank you, everybody, and have a great rest of the Tuesday afternoon. Bye-bye.
Bye.
Bye-bye.
Thank you.